Hello and welcome. This is Business Incorporated coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. On today's show, Ghana seen to become the fourth biggest oil producer in sub-Saharan Africa by 2020. The International Monetary Fund forecasts Namibia's economic growth to slow to 2.5% this year. Plus, EU's new €44 billion Africa Fund to target Sahel region. We begin in the U.S., where the U.S. Federal Reserve left interest rates unchanged on Wednesday, but strongly signaled it could still tighten monetary policy by the end of this year as the labor market improved further. The Fed said U.S. economic activity had picked up and job gains were solid in recent months. Fed Chief Janet Yellen says its rate-setting committee had decided against raising rates for the time being until there was more evidence of progress towards its employment and inflation objectives.
Colleagues and I on the Federal Open Market Committee discussed overall economic conditions and decided to keep the target range for the federal funds rate at 1/4 to 1/2%. We judged that the case for an increase has strengthened, but decided for the time being to wait for further evidence of continued progress toward our objectives. Our current policy should help move the economy toward our statutory goals of maximum employment and price stability. The recent pickup in economic growth and continued progress in the labor market have strengthened the case for an increase in the federal funds rate. Moreover, the committee judges the risk to the outlook to be roughly balanced. So why didn't we raise the federal funds rate at today's meeting? Our decision does not reflect a lack of confidence in the economy. Conditions in the labor market are strengthening, and we expect that to continue.
Janet Yellen, U.S. Federal Chief. Now let's cross over to Europe to see how the markets there are reacting to that decision by the Fed. DWTV Channels TV business correspondent at the Frankfurt Stock Exchange, Janelle Dumoulin, joins me now. Good afternoon, Janelle. Did the Fed's decision to keep rates unchanged come as a surprise to the markets? How is the market digesting that decision?
Now, the Fed's decision was quite expected, so in that respect, there was little surprise here to be found. Now, as you can see, because of that expectation, the DAX is performing quite well today. As you can see behind me, it opened very strong and held on to those gains, as also expectations solidify that a tightening of policy will only proceed very, very gradually, with a rate hike of a quarter percent point occurring likely before the end of the year, or the latest by the beginning of next year. Now, the markets are obviously quite happy that their predictions turned out to be true and priced in appropriately.
Now, the ECB chief, Mario Draghi, is billed to speak this afternoon. Investors, I'm sure, are waiting to hear what he has to say. Now, what is expected of him?
Yes, actually, investors are already shifting their attention away from the effects of this Fed decision to await what the ECB chief, Mario Draghi, has to say. He's giving a sort of state of the Eurozone speech, as we understand, and what they will be doing, what investors here will especially be doing, is scanning his speech for signs as to the future of his quantitative easing program. Based on the conversations that I've had here on the trading floor, the expectation is that he will do much of the same. Remember that the last time we heard from him, it was September 8th, and he basically left the ECB's aggressive stimulus measures untouched. Many are expecting that same thing to happen this time around. Many are expecting him to hold on to this wait-and-see approach to see how effective his policy is over a more long-term basis. So if he were to announce something, say like he was going to expand the quantitative easing program, now that would definitely come as a surprise to the people here.
Now, comments from the German Finance Ministry today suggests some hurdles to growth in the second half of 2016 for the German economy. Now, are investors there worried about this? Hello, Janelle. All right, let's move on now to the Asian market. That market there climbed across the board today as uncertainties surrounding key monetary policy decisions came to a close following Wednesday's announcements from the U.S. Federal Reserve and the Bank of Japan. Australia's ASX 200 closed up 34.94 points, with most sectors finishing higher. In Hong Kong, the Hang Seng Index briefly touched a session high of 24,058.65 before paring some of the gains to trade up 0.56%. Mainland markets in China also gained, with the Shanghai Composite closing up 16.81 points, while the Shenzhen Composite was up 0.62%. The Japanese market, which climbed nearly 2% on Wednesday following the Bank of Japan's decision to overhaul its monetary policy framework, was closed today for a public holiday. Well, we seem to have Janelle back to us here now. And I was asking Janelle about the comment today by the German Finance Ministry, which suggests a hurdle, to the German economy. Are investors worried about this?
Again, as I do here at the Frankfurt Stock Exchange, I hold a regular dialogue with the people that I meet here. And based on the conversations that I've been having with them, the German Finance Ministry's comments aren't really coming over as a shock. These are things that they thought he would say, and it's not really affecting trading in a major way in the short term, and it's also not expected to. Now, however, there are some additional economic data coming out today that investors are more likely to pay more attention to. For example, we expect Eurozone consumer data to come out. There are also U.S. and jobs data that are expected to come out, like I said, to come out of the United States. So there's plenty more information for investors to draw on, and they're not deeply unsettled by the remarks today from the German Finance Ministry.
Well, thank you very much, Janelle. I just have to let you go at this point. Thank you for your time. We'll still move on now to, of course, back to Asia, where China's outward direct investment flows grew 18.3% to $145.67 billion in 2015. That's the world's second highest after the United States. It was the first time the world's second largest economy has climbed the spot after overtaking Japan. The breakthrough saw China's ODI account for 9.9% of the world total last year, up from 0.4% in 2002. According to a report jointly released by the Chinese Ministry of Commerce, National Bureau of Statistics, and State Administration of Foreign Exchange, by the end of 2015, 20,200 Chinese investors had established 30,800 enterprises in 188 countries and regions around the world that invest directly abroad, with their total assets surpassing $4 trillion. Still in China, that country has opened its first national gene bank in the South China city of Shenzhen. The purpose is to protect, study, and utilize good genetic resources. The gene bank was established in 2011 with the support of the Beijing Genomics Institute to better protect research and utilize China's precious genetic resources, boost the genetics industry, and safeguard the country's genetic information. It is the world's fourth national level gene bank after the United States, Europe, and Japan. And when we come back after the break, the chairman of the Hayes Holdings, Mr. Tony Elumelu, speaks on Africa's development. Do stay with us.